Welcome to the channel, ladies and gentlemen. Okay, today will be the fourth and the last video in the series about the global look at the price action of Bitcoin. And if you didn't watch the first three videos, in the first one there was a kind of a bullish look at the price action, some bullish arguments. And the second one, it was a bearish video. And the third one, it was the video based not on technical analysis, but more like on the supply and demand arguments and some neutral and my personal view on the things. So today I will try to give you an advice, although I'm not a financial advisor, and everything which I say is my personal opinion, but still maybe it would be useful for some of you who are maybe not that familiar with the market, who doesn't have experience big enough to be profitable constantly. So basically, what shall we do in order to get some profit from this price action, regardless of how it will evolve in the future? Well, I would say that for a non-professional trader or investor, there's basically only one simple strategy, apart of just simple accumulating and holding, is to try to buy the bottom and sell the top. Don't trade on the way from one to another, but try to spot the entry for the long position. Of course, you can also short the market. It's pretty much the same thing, but it's a little bit more risky because in general assets are growing, including Bitcoin. And now you'd ask me how to spot the bottom. Well, first of all, I would say that it's pretty much impossible. However, what you have is you can see the trend. And this is, for example, the trend in previous cycle. It was the growing trend. This was the bearish trend, right? And so on and so forth. So what I want to say is that it's much easier to spot this trend than just to try to catch and to guess where is the bottom or where is the top. So there's a kind of a golden rule that we should follow the trend. We shall buy on the growing trend, we shall sell on the falling trend, right? And there is a huge mistake of many people out there who are starting to trade without much of experience. They try to catch this falling knife. They try to buy the real bottom and they try to sell the real top, or sometimes they don't sell at all. And buying the bottom usually leads to this kind of scenario. So they are buying here and they don't sell even here. They eventually have the loss, or buying here and again have a loss, and so on. Instead of that, one could just wait until the trend is established, somewhere around here, for example, buy and sell somewhere around here. So not exactly bottom and the top, but getting the huge area of this trend, like 60 or maybe even 80% of the trend. And as it was said by Les Arostani or Peter Brandt, we need to get like the middle of the burger. We need this 60 or 80%. We don't need those carbs and calories from the bottom and from the top. We need like the most important and most juicy part in the middle. So this is the main idea. So the thing is, you need to see where it is a proper place to enter and where is the proper place to end. So how to spot these places, I will tell you a bit later, but now I want to ask you this question, which was in a poll from Carter Thomas quite a long time ago, July 2018. So he is asking, which would you rather invest in? Asset A, which has 95% chance of returning 2%, or asset B, that has 75% chance of returning 7%? As you see, among 4,500 people, the majority, 72%, has answered that they would pick an asset B because, yeah, it's like just a little bit less chance of getting your profit, like 75%. It's still a fair chance to be in profit, right? But you'll have 3.5 times more profit than comparing with the asset A, 7% instead of 2. So just pause this video and ask yourself, which version would you pick? Which asset you would rather invest in, A or B? Okay, of course you may argue with an answer, but think about this in the way that this percentage is almost like 100% of chance that you will get some profit. Let's say we will put it to the extreme and have it like 99.9% of returning 0.01%. and here is the same, like 75 or whatever, getting much more. When you look at this like raw numbers, you may think that although this is like better in terms of the risk, but it's very little profit, right? So you wouldn't, what's the point to getting it anyway? So you better to get a little bit higher risk. You expose this to higher risk, but it's still fair chance to get this investment done, and your profit will be much higher. But think about this from the perspective of the leverage. In fact, if you have almost 100% chance of your profit being made, you can always get into the leverage. You can always borrow some capital, and then your investment will be much more profitable, despite the initial figure of the return is much lower than this one. So here's basically the main point. You need to use the certain strategy which probably would not give you the best like output from the first place. However, if you would utilize the leverage and would have the lower risk for this investment, for this trade, then you would still be more profitable, or at least effectively will be more profitable. So returning to our point about the trend, if you know more or less where the trend started and where the trend about to be over, then you will pick that 80% or 60% move of this trend. Let's say you buy here, sell here. Of course, you will not get all of the move, all of the trend from the bottom to the top. However, with a lower risk and maybe utilizing some leverage over here, you will be able to profit from this move. So the point here is, right now, how can we apply this strategy? Well, of course, so far we are in a downtrend from August, or actually even June, I would say. We are in a downtrend, and we don't know when this trend will be over, when will be the reversal. First of all, the simplest thing is again to buy when the trend will be shifting from bearish to bullish. And the second thing is to follow the downtrend, opening short positions and so on. Well, technically they are the same, but playing long is always kind of better, simpler in terms of psychology, and especially if you're trading spot without leverage, then in a long term it's more profitable. But anyway, what are the two scenarios which we already talked about in previous videos in terms of the reversal? So first is this kind of a V-shaped reversal, and then we'll continue to go up. And this is pretty easy. Like right now, we don't have the very strong acceleration to the downside. We don't have the volume at this area. And we will have this at some point, probably maybe even lower than $3,000 or above $3,000. Nobody knows. But based and looking at the situation in the market, at how the price will evolve, we can say that with a high probability that this would be the V-shaped reversal from the downtrend to the uptrend. Maybe it would be temporal one. Maybe after the bounce we will see something like this. But at least at some point we will be able to enter the uptrend, which will be somewhat long term. So in this scenario, it is very unlikely that you will be able to spot this point. So the thing is, after it will have a bounce, it will have the pullback to the downside. And I would say that it was almost always, like if you look at the price history of Bitcoin, again, almost always market gives you a second chance. So for example, here, as soon as we'll have the first significant drop to $46, then the next rise was to 160. Yes, 160 is much lower than 250, but it's really high anyway. And that would be, this huge dump would be the first indication for the fact that we actually reached the top. And maybe some more downtrend is about to occur, and exactly what happened after that. Again, here you might not be able to buy at $64, but you will be able to buy later at $90. It's also not that bad. Again, you'll not be able to sell at $1,200, but you will be able to sell the next spike over here almost at $1,000, and so on and so forth. This drop, you couldn't buy at the very low 150 or 160, but you see here, $200 or a little lower, a little higher is still very possible. The same here, the same very likely will happen with the current end of the current downtrend. So we will get this V shape, we will go up, this will be a first bounce, and then eventually we will return to the area somewhat close to the bottom, which we like the absolute bottom. The same as what happened here, right? So we just need to be brave enough to buy the second dip, but we will see this huge volume over here, right? We will see the drop which happened after the acceleration of this downtrend, so it's very likely will be the real bottom, and this one will be a second bottom, will actually higher than this one. And even if we will make a mistake, then it would be easy to set a stop order below this previous low, and then even if you will make a mistake buying here, you will not risk too much because the stop is very close, and again, risk to reward ratio of this trade is very reasonable. The second option is that if we will, let's say, start to go sideways from here, you may say that, well, it might be the bottom already, right? And we are going like this. Well, if so, then this accumulation should be quite long, and because of this volume is low, so the reversal through the accumulation should require some time. And if we will see that exactly like sideways price action for a while, then indeed we can expect that this is reversal at some point, and we will have the move to the upside eventually. So it would be reasonable to buy at one of those areas at the lows over here. And yeah, it will be still a nice entry. Maybe not as good as $6,500, but again, it's almost impossible to buy this absolute bottom. So as you see, there is a quite decent strategy which always would give you that 60 to 80% profit, this main part of the trade which you can get following the trend, uptrend or downtrend. And again, even if you'll play short over here, like you can open short even now with like stop order, which would be not that great, let's say $10,000, then it will be not high leverage trade. But if you'll do that, then you can actually wait until the reversal or until we will see something like this. So it's very unlikely that from here we'll make a shoot to the upside. Like we had it already. I doubt that we'll go above this area. It's, of course, there's no certainty in the market. Everything is possible, but just unlikely. The probability is low. So we're trading probabilities here, and the most likely thing which will happen is either this or this. In both cases, if you're playing short, you will either benefit from it or you will lose very little because of this sideways price action. So eventually, if we will see this moving sideways, you will just close your short, maybe even in a small profit, or at least in a very little loss, and then switch to the long position, and then benefit from the rise uptrend which will happen eventually. So of course, there is no guarantee that all of this will play out, but the history shows like that. The statistics of the market, not only this one, but all the markets, is supporting this. So in any case, despite this is not financial advice, but this is my strategy, and this is what I am planning to do, looking at this trend and expecting for the next move to the upside. Hopefully, guys, you can benefit from that as well, because, well, I would like this to be useful. And that is it for today. We'll keep you updated. See you in the next video. Goodbye.